Welcome to TradeTheNBA.com. This is John. This report is for the 11th of February. Well, we had a little bit of softness that came, supported off a few of the little ABMs right there. Magenta, the white, didn't quite get down to the green ABM, which was all the way down at 72 because the low was about 80. It's pretty decent action. We just supported right above the 76. So despite the soft weakness that we were seeing from the readings on that DOC spread, already a turnaround with the daily from the steel about to cross over red, warning that, hey, your downturn could already be finished. Can you imagine that one at this particular point? Getting an oversold kind of setup. Now it has to still cross, and you would expect to see the final punctuation of steel crossing cyan at that juncture to really give the indication. But we've got plenty of shorts within the daily that certainly can propel this much higher. Would not be a surprise given continued strength in the economy. I'm sure everyone will be looking at the next jobs number to see if those that 300 plus thousand was a fluke or if it's something that's going to be sustained. From an NQ standpoint, almost identical. Actually, it's a little bit closer to the crossover points. And effectively what you're getting is a reset of the shakeout, meaning overbought is gone and you are set to begin a new cycle. Interesting, this all happening within the fate of the euro. Was interesting because Italy just announced that they want to end their central bank. That would be a shock to the system. I don't even know if there's an equivalent to describe what that would do. Certainly would shake things up, that's for sure. But the fake pops we've seen in the euro, and that no surprise as they try to have the U.S. prop up the euro a little bit, because the reality is with the U.S. growth compared to the rest of the world, not just Europe, it should be far lower than it already is. But that's okay. The U.S. doesn't want to get too low because it will hamper exports. We don't want to do that. The reflection into gold is just that, you've got this simmering build of inflation. However, there's just been a lot of slack in the way demand has been distributed across the globe, and that is certainly putting restraint on inflation. The Fed tried to get a little bit aggressive attacking it, but it was a bit premature, and it certainly caused a lot of political conflict for them. It doesn't mean it wasn't justified. It just means that the sour market reaction to the continued Fed attack on the economy and growth. And like I've always said from day one, you can let the growth happen and you can trail the inflation side of it a little bit behind and still be okay. But they don't listen to me. That's all right. From an intraday standpoint, we ended the previous Thursday action right up at the peaks. DOC spread developed in there. We didn't get a return buy. None of this dipped down enough to create that. And just as you might be getting that spread on the yellow over magenta on the shakeout, you get the yellow warning dot there because it's starting to get overbought. And sure enough, you had the cross right here, and then it just started to spread and eventually just grew all the way to there. You did get the reset on the secondary one with a dip below the red line, which ends up getting filled a little bit later on, again, peak move right at the 50% where you get the short snake. And that just led to a little bit more, soft action. You can see here this is a perfect example of not getting a reset of the steel coming back underneath, and that just bleeds down to lower and lower. However, even despite that making successive lows, not dipping below the red line on the shakeout tends to get a little bit more bullish than bearish when you have those kind of configurations taking place. Then as we scroll across towards the day's end, we certainly got a much more dramatic movement. We had the little buys again, same situation, overbought just over the 50%, produces that exact same short snake move as you get red rolling over, green below. just confirms it, and then again you're back down to the bottoms, except for this time no dips below the red line every time you're making the matching lows, and you start to build your P2s, P3s all together at the same time, and certainly improved shakeout. And then right there you can see that you got your gold starting to rise on that second P3 level. It even happened as early as the P2 started right there, and then that just caught fire, never even touched an ABM, and proceeded to just have cyan under red all the way through. A lot of positive extremes. Most of these early ones got filled, and then there was the breakaway move, and guess what? We've just filled back that breakaway move. So took care of that, which leaves it wide open for the Monday. We would expect that pre-market highs, you get those retested back up, a little bit of softness right now. All in all, pretty straightforward action with what we're seeing. Nothing too extraordinary, and certainly in line with what your expectation. Growing economy, the bias is still to the upside, so don't forget that one. Doesn't mean we're not going to get short plays, it just means that you have to be cognizant that their buy reversals on discount will certainly be attractive to new buyers. Even through this part, we didn't see a massive run up on the fourth and the fifth, so it's sort of like a delayed buying, and that's going to happen back and forth. Looking for opportunities. Anytime they can see an imbalance, they're going to take it. So that's the way they love to squeeze people on both sides of the situation. As always, though, I'll put up any relevant charts and keep you updated. Trade well.